The Strait of Hormuz is effectively shut. 1/5 of the world's oil supply is blocked. Brent crude is trading around $90, while crude oil is trading around $85. Forecasts are pointing towards $120. I'm covering this straight from Dubai. And right now, the oil market is one of the most important story in global finance. And more importantly, you can now trade these assets with zero fees 24/7. Hello everyone, I'm Kai and welcome back to the Mindful Crypto Life. Today, I'll be telling you exactly what's happening. The US-Iran conflict has escalated to the point that the Strait of Hormuz, which is a narrow passage carrying around 20% of the global oil supply, is effectively shut down. Iran has been laying mines, and the US forces sunk 16 mine layers. Saudi Arabia, Iraq, Kuwait, and the UAE have all slowed exports. Infrastructures are being hit. Oil spiked hard over the past few days. Brent hit a 24-hour high of $94, while crude oil touched around $90 before pulling back to where we are right now. Today, prices pulled back after the IEA proposed the largest emergency reserves release in the entire history. Over 100 million barrels in the first day alone, bigger than anything during the 2022 Ukraine crisis. The G7 is backing it, but markets are not convinced it is enough to offset the disruption. Analysts are forecasting around $106 by the end of the quarter. And if the conflict drags on, models go to $120. I'm watching all of this from Dubai in real time. The regions move the oil market, and the oil market moves everything. And now you might be asking, why does this matter in a crypto channel? Well, there's two good reasons. First, oil is the foundation of inflation. When oil spikes, the energy costs rise, transport costs rise, food costs rise. That feeds directly into the CPI, the inflation data that we covered yesterday, which itself would drop this morning. A hot oil market makes the Fed jobs harder and pushes rate cuts further out. A sustained oil shock delays Fed rate cuts. Delayed rate cuts means less liquidity flowing into risk assets, including Bitcoin and every crypto out there. Second, oil is a risk appetite signal. When geopolitical tension is high and oil is spiking, investors get defensive. They sell risk assets, including crypto. When tension eases and oil pulls back, just like on Monday when Trump signaled that the conflict could end, Bitcoin jumped 4% on the news alone. Oil is not just an energy story. It's a macro signal that every crypto investor should be watching. And here's what most beginners don't know. You can actually now trade oil directly in your favorite crypto exchanges, just like mine at Phemex. Phemex offers perpetual futures trading on two oil benchmarks: West Texas Intermediate Crude, or your XTI, Brent North Sea Crude, which is your XBR. Now, trading this on Phemex means no broker, no middleman, and no commissions. You're basically trading against the market, 24 hours a day, 7 days a week. And all you have to do is have an account, deposit to your account, and trade with zero fees. Personally, if the escalation pushes forward, I will be longing it with a take profit at $106 and $120. And I will be shorting it if the IEA release caps the rally. The best part here is the geopolitical read is yours, and so is the execution at zero fees. Now going back, the Strait of Hormuz story is not yet over. I'll keep covering these topics while it develops. So if you want to stay updated, make sure to subscribe to my channel. And let me know down in the comment section below if you think we'll see $100 before this conflict cools down. And make sure to leave a like if you like this content. Again, I'm Kai from the Mindful Crypto Life. It's always great to see you here, and I'll see you again on the next one. Bye bye!